Welcome back to the Wall Street Breakfast. It is time to get smarter about money. Subscribe for more awesome content, and let's get started. This is how to build up wealth. Building wealth requires discipline and patience because it takes time to get there. In the meantime, you can give yourself an extra boost by investing your hard-earned money in ways that will earn you interest over time. You might be surprised to find out how many different options are available to you if you know where to look. While savings accounts are great for depositing your cash and earning next to nothing in interest, they're not always a good place to store your emergency fund or short-term savings. So what should you do with extra cash? Consider buying bonds. Bonds are debt securities issued by governments, corporations and municipalities that pay a fixed rate of interest, usually twice per year, over a set period of time. For example, if you buy a bond worth $1,000 due in 5 years from XYZ Corp., it will earn 5% annually, $50 per year, plus return its face value at maturity. As long as XYZ Corp. is still around, and paying out interest, you can hold onto your bond until it matures and collect $1,000. If XYZ goes bankrupt before then, you'll get back only whatever percentage of its original value was paid out as interest during those 5 years. It may sound counterintuitive, but one of the best ways to grow your nest egg is to buy a piece of property. While there are several advantages to real estate as an investment, two stand out: it's tangible and it yields rental income. You can physically see how much your real estate has grown over time. In addition, you have an asset that you can use to generate income. Renting out a room or space in your home will help pay for upkeep and maintenance on your property. For example, if you bought $200,000 worth of property in 2005 with a 5% return rate and only paid $2,000 per year in interest payments on that loan, which is very low, by 2015 you would have earned more than $70,000 from that initial purchase alone. Opening a high-interest savings account is an excellent way to earn interest on your money. But it's not as simple as choosing one of your largest banks and walking in. There are a number of financial institutions that offer higher interest rates than traditional banks. High-yield online savings accounts are quickly becoming popular, and they can yield up to 2% APY, or annual percentage yield. That means you could potentially earn $2 for every $100 you save. That's double what you might get from a traditional bank. Just keep in mind that when comparing interest rates, you need to look at all fees associated with each account, not just annual percentage yields, to make sure you don't end up losing money over time. If your goal is to build wealth by earning interest, be sure to choose a reputable institution and read all terms carefully before signing up. The easiest way to earn interest is to invest in dividend stocks, where a company pays you for holding its stock. Many large public companies, including Coca-Cola and Verizon, offer dividends to their shareholders. The trouble with dividends is that not all companies pay them out every year, and some cut or eliminate them during recessions. One solution is investing in an exchange-traded fund, ETF, that tracks a market index such as Standard & Poor's 500. Most ETFs are designed to distribute dividends on a quarterly basis. A popular choice among investors is iShares Select Dividend Index Fund, DVY, which has been paying dividends since 2004. Another option is Vanguard Dividend Appreciation Index Fund, VIG, which has been paying annual dividends since 1988. Both funds have low expense ratios of 0.10% per year, meaning they will keep your costs down while still providing solid returns over time. These investments won't make you rich overnight, but they can help generate income from your savings without much effort. The biggest problem most people have with money is that they don't have any. And while you could always go back to school for a degree in finance, chances are your schedule is pretty packed, and going back to school isn't really an option right now. Fortunately, there's another option for building up your financial knowledge: hiring a personal finance coach. Aspiring coaches can teach you how to invest, how to save money, and how to make good decisions about your finances in general. While it might seem like hiring a coach would be expensive, many of them offer their services at very reasonable rates, especially compared to what you might pay for grad school. Drag_indicator. In fact, many coaches work on an hourly basis, so if all you need is help coming up with a few solid investment ideas or learning how to create a budget and stick to it, you may be able to get everything you need from one session. If you made it until here, thank you for watching. Please support the channel and subscribe.